In the last 11 months, Anduril doubled from $30.5 billion valuation from their Series G funding in June of 2025 to $61 billion on Wednesday. Their Series H, $5 billion. That is 28 times revenue. The narrative writes itself. Defense tech is having a moment. Venture capital is flooding in the same way that it did for AI. But what's interesting is not the multiple itself. It's that Anduril's revenue looks nothing like an AI labs. Hey, it's Steph, and this is your Private Market Pulse. Let's dig in. Anduril's Wednesday's raise wasn't the only big one in the defense tech space in recent months. Shield AI raised $1.5 billion in March, and Helsing closed $1.2 billion this week. Defense-related venture funding crossed $4.5 billion in Q1, a record quarter, placing it squarely behind AI as a destination for late-stage venture capital. And a lot of the same investors are writing both checks. But the revenue underneath these two categories has almost nothing in common. AI labs run on consumption-based revenue, sold to enterprises, developers, and everyone in between. Anthropic went from $9 billion to $44 billion in annualized revenue in roughly 6 months. The demand is clearly real, but the business is moving fast enough that the point-in-time numbers are unstable inputs. Anduril is structurally different. The revenue isn't consumption-based, it's contracted. The Pentagon awarded a $20 billion contract in March, the largest the Army has ever handed to a company that didn't come up through traditional defense. But that doesn't mean they'll receive $20 billion tomorrow. It means that the Army has committed to buying up to $20 billion worth of work from them over the coming years. It's not just the Pentagon either. Multi-year deals are already in place, with foreign governments signing on. A contract with the Dutch Ministry of Defense this week went from signature to operational in under 1 month. Historically, that procurement timeline runs 18 to 36 months. And that's what happens when defense procurement is software-led. And unlike a subscription, these commitments don't disappear when a competitor ships something faster. They run for years, and the backlog is public record. So where does Anduril's revenue sit relative to the category? 2 reference points from the public markets frame the question. Lockheed and other traditional defense companies trade at roughly 1.6 times revenue. Palantir, a government software company that expanded into commercial markets, trades significantly higher. Where private defense tech companies like Anduril ultimately settle is still an open question. But unlike an AI lab, you can actually check the math while you wait. DoD award filings are public record. You can do the homework, but the homework raises more questions than it answers. Here are the 3 that are worth thinking about. 1. How much of that $20 billion contract actually converts? The Army has issued 1 large task order. The remaining $19 billion resolves over the next 2 budget cycles. 2. Whether allied governments follow the US pattern. NATO spending has been rising. Whether that translates into Anduril-style awards across Europe and the Indo-Pacific will be interesting to see. And 3. How public markets ultimately price the category. SpaceX's expected listing is a near-term test. The market still needs to set a precedence for what a software-heavy defense company is worth at scale. None of these questions have answers today, but what is clear is that defense tech is now the second most funded venture category in the world, only behind AI labs. The same investors, the same capital, but they are fundamentally different businesses. And Wednesday's round only makes sense if you understand that difference.